Hello everyone. Today we are starting a new chapter, which is chapter number 3, leasing decisions, from your study mat. This chapter carries 8 to 10 marks of question in every attempt. So, for your better understanding, I've divided the chapter into 5, type of questions. So, one by one, we will be doing, 1 to 2 questions from each type. Before starting the chapter, I would like to tell that why we are doing these questions. What is the significance of making leasing decisions? Whenever we require asset, company has two, either a company or any person, we have two ways of getting an asset. Either we can purchase the asset or we can take the asset on lease. So we have to evaluate both the alternatives to find out which alternative is better in the sense of lower cash outflow. Means we'll choose that particular alternative which leads to low cash outflow. So that is the main reason we are doing these questions. We are evaluating the proposal. We will be evaluating the alternatives, that is the buying option and the lease option, and we will decide on that particular option which is beneficial for the company or the person. Okay, so that is the main reason why we are doing these questions. So let's start with the type 1 question. So type 1 is when loan installments in case of purchase of an asset and lease rentals in case of leasing the asset, they are paid at the end of the year. Okay, so there is a set pattern to solve the question. I'll be giving you that set pattern so that it will be easy for you to remember it and to perform it better. Okay, so let's get started. So let's start chapter number 3. Leasing decisions. Okay. Type 1. When loan installments as well as lease rentals are paid at the end of the year. Okay, so the first question which we'll be covering from this type is question number 5, which is on page number 3.17. Question number 5, page number 3.17. Okay, so let's read the question first. The question is, XYZ Limited requires an equipment costing 10 lakhs. The same will be utilized over a period of 5 years. It has two financing options in this regard. Arrangement of a loan of rupees 10 lakhs at an interest rate of 13% per annum. The loan being repayable in 5 equal year-end installments. The equipment can be sold at the end of 5th year for 1 lakh. Okay, so we have the first alternative which we have been given in the question is to purchase the asset through acquiring a loan from a bank at an interest rate of 13% per annum, which would be repayable in 5 equal installments at the end of the year. And the scrap value of the asset is 1 lakh at the end of the 5th year. The second alternative is to take the asset on lease for a period of 5 years at an yearly rental of 3,30,000, which is also payable at the end of the year. The depreciation rate is 15% WDV basis, income tax rate is 35%, and discount rate is 12%. We need to advise which of the financing options would XYZ Limited exercise and why. Okay, so we need to evaluate both the options, and then we have to decide on that which is more beneficial for XYZ Limited in terms of lower cash outflow. Okay, means which option will lead to lower cash outflow. Okay, so first we're evaluating the buy option. The first step is to calculate the installment amount. In the question, it is given that the loan is repayable in 5 equal annual installments, at the end of the year. So first, we need to find out that what is the installment amount. So the formula for finding out the installment amount is loan amount divided by PVAF R and N, where R is the interest rate and N is the loan term. Okay? See, the loan amount in here, it can be equal to the purchase price of the asset, or it can be less than that. Take as a loan amount will be actually the amount which the company has taken on loan, take it from a bank or a financial institution, as the case may be given in the question. What are the cases when loan amount will not be equal to the purchase price of the asset is when you require an asset and you have purchased an asset through financing option, but you have received a subsidy from the government. So in that case, suppose for example, I'm giving you the purchase price of the asset is rupees 10 lakhs and you have received a subsidy ticket from the government in amounting to rupees 50,000. So in that case, you have taken loan for only 9,50,000. So in this case, the purchase price of the asset will be 10 lakh rupees. So you'll be charging the depreciation over 10 lakh rupees, but the loan amount here, which you will be using for computing the installment amount, will be 9,50,000. Okay, so that is the only case. You'll be finding one or two questions in the module, which pertains to the case as I've just quoted. Okay, so this is the way you have to find out the installment amount, which is loan amount divided by PVAF R and N, where R is the interest rate and N is the loan term. You just put in the figures and find out the answer. Okay, so I'm putting out the figures here in the question. The loan amount which is given is 10 lakh rupees divided by PVAF. Interest rate is 13% and N, which is a loan term, is 5. Okay, so 10 lakhs divided by. I hope you know how to compute the PVAF, because we've already learned it in the IPCC level. In case if you don't know, I will be telling you at the end of the class. Okay, so the PVAF 13% and 5 will be, it is 3.5172. Okay, so 10 lakhs divided by 3.5172. The answer is 284317, means 2,84,317. So that is the installment amount. So I'm going to round it off. So I'm going to write it 284320. Okay, it is 284320. So that is the installment amount. Now the second step, after computing the installment amount, the second step is to prepare the repayment schedule. Because we need to find out that how much portion in this installment amount is the interest and how much portion pertains to the principal amount. So the main purpose of making the repayment schedule is to compute the interest amount in different for different years. Okay, so the second step is to compute, is to make the repayment schedule. So let's get started with it. Repayment schedule. So the columns which you will be making in this will be, the first is years, the second will be outstanding loan, the third will be interest at the rate of interest rate, which in this case is 13%. Then write principal repayment. Next column is installment, and the last column is your closing balance. Okay, so here again, in this case, we have to repay the loan in 5 equal annual installments. So in years, we'll be writing 5 till 5. 1, 2, 3, 4, 5. Installment amount is same thing in all the years. So just mention the installment amount. It is 284320 in all the years. Okay. The outstanding loan ticket is 10 lakh rupees. Now, how we have to compute the interest? The interest is to be computed on the portion of outstanding loan. So here in first year, the installment amount, the outstanding loan is 10 lakhs. So we'll be computing interest on 10 lakh rupees at the rate of 13%. So it is 10 lakhs Q per 13%. It's 1,30,000. Okay. So I'm writing down here. It's 1,30,000. Now, the installment amount is 2,84,320, out of which 1,30,000 pertains to interest portion. So the remaining portion, the difference between them is what? Is the principal repayment. Okay, so this is the way we are going to find out the principal repayment, the difference between the installment amount and the interest portion. Just minus it and write it down. It is 1,54,320. Okay, so in the first year, the installment which we have paid is 2,84,320, out of which 130 is the interest portion and the remaining 1,54,320 is the principal repayment. So the outstanding loan ticket which was standing at the end, in first year is 10 lakh rupees, out of which 1,54,320 is already being repaid at the end of year 1. So the remaining portion of loan ticket which is outstanding, at the end of 1 year, at the end of first year, ticket will be 10 lakh minus 1,54,320, which is 8,45,680. Okay. So here this is the closing balance of year 1. So it will be the opening balance of year 2. So just mention this figure here, 845,680. Now the outstanding loan ticket in second year ticket is 8,45,680. So you'll be computing interest over this amount at the rate of 18%. Okay, so this into 13%. The interest is 1,09,938. Just mention it here. Mention in the table 10,9938. Now again, installment portion is this. The installment amount which you have paid at the end of second year ticket is 2,84,320, out of which 1,09,938 is the interest portion. The remaining portion is what? Is the principal repayment. Okay, just minus it and write it down. The answer is 1,74,382. So out of 8,45,680, in second year ticket we have repaid 1,74,382. So this means the balance loan ticket which is outstanding at the end of second year ticket will be the difference between these two. So 845 ticket 680 minus 1,74,382 will give you the closing balance. It is 6,71298. So in the same manner, we will be proceeding with the remaining years. And just do it in the same way. And just write out the answer. I'm solving it and I'm solving it on my own. And giving you the answers. So in the same manner, I've computed the figures of year 3, year 4, and year 5. Okay, so this is the way we have to make this repayment schedule. The main purpose of making this repayment schedule is just to find out the interest portion. Because we'll be computing tax savings over it because it is an expense. Okay, so after making the repayment schedule, the next step is to compute the depreciation. You can do it separately. Because this is the first time we are solving the questions. So I'll be doing it separately. Later on we'll merge it with the other tables. Okay, so I'll be making a separate depreciation schedule. Okay, so the step 3 is to make the depreciation schedule. So here in the question it is given that the rate of interest is 15%. The method is WTV basis. So the columns in which you will be making here is years. In case of WTV, in case of SLM, the amount of depreciation remains same in all the years. Take in case of depreciation, the amount, in case we are computing the depreciation using WDV method, then the amount of depreciation differs in all the years. So I'll be telling you a simple method to compute the depreciation. So in that you have to make the columns years. So years here in this case it's 5, 1, 2, 3, 4, 5. Then we'll be writing the next column is, so the next column is the gross block, then the depreciation, and then the fourth column is the net block. I'll also be telling you the shortcut method of computing the depreciation. But in case if you are making it separately, if you're making a separate schedule for depreciation, then this is the proper way of presenting it. But in case if you're doing it through a shortcut method, which I'll be telling you later on, after completing, after making this schedule. Because it's very important for us to save time in the exam. Because questions are lengthy, so we try to avoid unnecessary working notes. Okay, so even if we can merge the working notes, it is better for us to save the time. So, but this is since we are doing it for the first time, so I will be telling you properly. So in case if you are making this depreciation schedule separately, you have to make it this particular way. So here the gross block at the beginning of the year gets 10 lakhs. Your depreciation is to be computed at the rate of 15%. 15%. So 10 lakh rupees ke upar 15%. It's 1,50,000. Net block will be the difference between the gross block and the depreciation. So 10 lakhs minus 150, it's 8,50,000. Now, this is the net block at the end of the first year. You'll carry forward it. It will be the opening balance of it will be the gross block of the second year. So 8,50,000. Now you'll be computing depreciation over this. 8,50,000. Take it 15%. Take it's 1,27,500. Then just find out the gross net block. It's 722,500. Then 722,500. इसके ऊपर 15%. It's 108,375. Then 614,125. Okay. फिर इसके ऊपर 15%. It's 92,119. Then we need to find out the net block. It is 522,006. 522,006. Then इसके ऊपर 15%. It's 783,000. 522,006. It is 443705. Okay, so this is the way you have to make the depreciation schedule. It's very simple. We have already done it. But since we are doing it for the first time, so I'm telling you in detail. Okay. So I was telling you a shortcut method to compute the depreciation. It is in case of WDV. So how are we going to do it? The cost of the asset here is given 10 lakh rupees and the rate of depreciation is 15%. Okay. So what I'm going to do is 10 lakh rupees is 15%. It's 1,50,000. So this is the depreciation for the first year, as we have computed in the schedule. Now, for computing the second year depreciation, what are you going to do? You just find out 85% of this. Because 15% वो depreciation है आपका. So what the remaining figure will be 85%. For the next year. So that is the way we have to compute the depreciation. It's a shortcut method. So now 150 is the depreciation for the first year. Now we'll be computing 85%. So 127500 gets the second year depreciation. You can just see. फिर इसका फिर से हम क्या इसका फिर से 85% हम निकालेंगे. It is 108,375. ये हमारा थर्ड ईयर का निकल आया. फिर इसका फिर हम 85% निकालेंगे. 92119. तो वो हमारा यहाँ निकला है 92119. देन फिर हम इसका 85% हम कंप्यूट करेंगे. It is 78300 and it's 78300. So this is the way you can compute the depreciation in shortcut way. It will help you to save your time. Now the next step which we are going to do is to make a statement showing tax savings. I'm also making it separately, but in the other questions which we'll be doing afterwards, I'll be merging all these tables together. So it will help you to save a lot of time in the exams. Okay, so now the next step is to make the statement showing tax savings. So just write it down. Statement showing tax savings. Now, on what you will be having tax savings. Whenever a company incurs an expense, we save tax over it. Okay. Whenever a company incurs an expense, it leads to tax savings. So here in this table, we will be writing all the expenses which are being incurred by us. As in the present case, we have incurred only two expenses. The first is the interest expense and the second is the depreciation. So both will lead to tax savings. So we'll be writing both the expenses. So in the first column which I'll be making in this particular statement is years. Here if we have 1, 2, 3, 4, 5, then we'll be writing interest amount. Then I'll be writing depreciation amount. Then I'll be writing total, and then here I'll be writing tax savings. And what's the tax rate? It's given in the question. It is 35%. Okay, here it's given 35%. So tax savings at the rate of 35%. So interest amount again we have already computed, so I'm just going to copy it from as we have already done here. See, we have already computed, so you just need to copy it to take it right from this particular table to that particular table. Okay, so I've copied in all the interest amount, in all the years. Now I'll be copying the depreciation amount. In the first year it is 1,50,000. In the second year it is 1,27,500. In the third year it's 1,08,375. Then it is 92,119. Then it is 78,300. Okay. Now the total, it's a summation of the interest amount and the depreciation amount. Okay. So it's 130 plus 150. It is 2,80,000. Then 109938 plus 12750. It is 237438. Then 87269 plus 108375. The answer is 195644. Then we have 61652 plus 92119. It is 153771. Then 32741 plus 78300. It is 111041. Okay, so this is everything we have computed the total. Now we will be computing the tax savings. Now how to do it? The total, जो हमारा total हमने निकाला है, this is the total expense. इसके ऊपर just multiply it by the tax rate. ठीक है, so that will give you the tax savings. Okay, so 280, ठीक है, इसका 35%. So it's 98,000 is what is the tax savings for the first year. Now for the second year, 237438, इसका 35%. It is 83103. Then 195644, इसका 35%. It is 68475. Then 153771, इसका 35%. It is 53820. 111041, इसका 35%. It is 38864. Okay, so this is the way we have computed the tax savings in all the 5 years. Now the next table which we are going to make is the statement showing PV of net cash flows. PV is the present value. Okay, so statement showing present value of net cash flows. So that is the last table which we will be making, and we'll be done with the evaluation of the buying option. So let's proceed on with that. So it is statement showing PV of net cash flow. Okay. So here again, taking the columns will be years. It's 1, 2, 3, 4, 5. Then we'll be writing installment amount. Installment amount we have already computed earlier, so which is 284320. So I'll be writing it. So it is 284320. Okay, in all the years the installment amount which we have paid is the same. Now the next column ticket will be the tax savings. See, installment amount is the outflow which the company has to make in every year. So the company is making an outflow of 2,84,320. This is a tax saving. It's an inflow. It's a cash inflow. Okay. So I'll be writing all. It's 98,000. Then it's 83,103. Then it's 68,475. Then it's 53,820. Then it's 38,864. Okay. Now, net cash outflow. How you will be computing? It's the difference between the installment amount and the tax savings. Installment amount is the cash outflow. Tax savings is the cash inflow. So in order to find out the net cash outflow, you have to find out the difference between both of them. So 284320 minus 98,000. It is 1,86,320. Now for the second year, it is 201,217. For the third year, 284320. It is 215,845. Then for the next year, it is 230,500. Last year it is 245456. Now the next column ticket will be the PVIF. This is the present value factors we have to write. So the cost of capital which is given in the question is 12%. It's 12%. So we'll be computing the discounting factors at the rate of 12%. I hope you know too how to compute it, or else I'll be telling you. It is very simple. See, so it is 12%. The discounting factor which is given in the question it's 12%. So how are you going to compute the PVIF? It is 12 divided by 100 plus 1 divide equal. So for the first year it's 0.893. 0.893. Now you just have to press the equal button. Now for the next year it's 0.797. 0.797. Then again equal. So it's 0.712. 0.712. Then again you have to press equal. So it's 0.636. So it's 0.636. Then again you have to press equal. So it's 0.567. 0.567. Okay. So this is the way you have to compute the present value factors. So that's simple. Last column is to compute the present value. Present value. Present value, or you can write present value of NCF, net cash flows. Okay. How you have to compute? Simply you have to multiply the net cash outflow which you have already computed by their present value factors. Okay. So I'll be doing it. It is 1,86320 into 0.893. It's 1,66384. 1,66384. Now for the second year, it's 201,217 into 0.797. It's 160,370. So it's 160,370. Now for the next year, it is 215,845 into 0.712. It is 153,682. Then 230,500 into 0.636. It is 146,598. Then 245,456 into 0.567. It is 139,174. So this is the way we have computed the present value of the net cash outflow in all the years. Now we'll find the total of this. So it will be total, or you can write present value of total net cash outflow. Or in the other way you can write it it will be better to write it total of present value of net cash outflow. Okay, so you just have to sum it up. Okay, so it will be 166,384 plus 160,370 plus 153,682 plus 146,598 plus 139,174. So the answer to which came is 766,208. So I'm going to write down the answer. 766,208. Okay. So this is the total of the PV of net cash outflow. Now this is the total outflow which will take place in 5 years. This is the present value of the total cash outflow which will take place in the 5 years in case if we go for the buy option. At the end of the year we will also be receiving the scrap value, so which is given in the question. So in the question the scrap value is given, it's 1 lakh rupees. So this is the cash inflow which the company will be having at the end of 5th year. So I have to deduct the present value of the salvage value from the PV of net cash outflow. Okay, so just write it down. This less PV of salvage value. The salvage value which is given in the question it is 1 lakh rupees. Okay, so it will be 1 lakh rupees multiplied by PVIF. The discounting factor is 12% and it's 5th year. So it is 1 lakh into 0.567 as we've already computed here. Okay, so that's why I'm not computing it again. So just simply multiply it. 1 lakh into 0.567. It is 56,700. 56,700. Okay, so we'll deduct this amount from this. So it will be 766,208 minus 56,700. It will be 709508. So this is the net cash outflow. 709508. Okay, so this is the net cash flow. In case if we go for buy option, this is the net cash outflow which the company has to bear, or which the company has to make in 5 years. Okay, now the second we have to evaluate the lease option. Then we have to compare it, and we'll go with that particular option which will lead to low cash outflow. Option 2, lease the asset. Now how do we have to compute the cash outflow in case of leasing option? Again, very simple. In this we will be directly computing the present value. So you have to write present value of net cash outflow.